There's optimism that a last-minute solution to the Greek drama will be found, and analysts are filling the street with calls on the euro. Our senior markets correspondent, Hyman, joins us now with the details. Jules, what is the street telling us?
Well, they've had a lot of time to think about it, haven't they, since this has been going on for so long. Kit Jukes over at Societe Generale is looking at the implications for the euro, or the lack of implications for the euro. He actually says that more important than the Greece situation right now is what the Fed is doing. And he's not the only one to be saying that this morning. I've seen some other commentary from analysts along the same lines. Whatever asset class you're talking about, they're saying that the trajectory of rate increases here in the United States is going to have bigger implications for the major averages, as well as for the euro, for that matter, than what happens with Greece. So we're seeing right now the euro actually quite little changed, as there's still this uncertainty about the outcome of what's going to be happening in Greece. On the other hand, an interesting survey out from Barclays that they highlight in a note this morning, saying there's complacency about a potential Greek exit. More than half of the respondents believe that a Greek exit from the eurozone will be only a small negative for the global markets because Greece is small and that there are buffers in place. This is reflected also in something we looked at last week, the spike that we had seen in yields in the peripheral countries in Europe that has not really happened this time around. There's been a small increase. They also say, according to Barclays, close to 30% see the risk of contagion is limited to other peripheral economies in the euro area. Less than 20% believe it will be a big risk for the global markets as opposed to just in Europe. So interesting commentary there. And also, I wanted to talk about the Greek banks. There's a call out from Goldman Sachs this morning just highlighting the deposit flight that we have seen from the Greek banks, and the idea that really the only thing that's been supporting it has been the European lending facility. You can see the National Bank of Greece and another big bank in Greece are both rallying today on the hopes that there will be some sort of last-minute solution. But something else that analysts have been talking about is that even if there isn't a last-minute solution, even if you do see an eventual Greek exit, that at least we will know what's happening. At least there will be certainty. At least the situation will be resolved one way or the other, and investors can sort of move on and deal with that knowledge.
But is it really a resolution, or is it more investors are just going to have some sort of information and they can manage their positions around?
Exactly.
Yeah, I'd say hope for a resolution is also in itself pretty optimistic.
Well, a short-term resolution at the very least.
Short-term meaning like a week, right? Because they still have to make the IMF payment in 8 days.
Yeah, but Matt, the most we're going to get is a short-term resolution, and all the market wants is to know that Greece isn't completely blowing up, exploding, causing so many particles to fly over here that we're forced to face it. They want to know that it's good enough so they can continue to invest here where everyone is super bulled up and excited about the economy. They just want to know that problem isn't mounting and they have to address it today.
Right. Good enough, I guess, that there's not a run on the banks is a pretty positive outcome for today.
Yes.
Well, there already appears to be at least somewhat of a run on the banks in Greece itself. The question is whether that would happen anywhere else.